Aguia Resources is a southern Brazil-based phosphate deposit. We are going to be the only source of local supply of phosphate in all of southern Brazil in the state of Rio Grande do Sul. In the last year, we put out a bankable feasibility study that was put out in spring, showing an NPV of US 300 million. And that was done at the bottom of the phosphate market, or very close to the bottom. The phosphate market has been in decline from a pricing standpoint for the last couple of years. It has just started to turn the corner right now. In our upcoming milestones, we're looking for our permitting in the next little while, in the very near future, along with our environmental impact assessment being approved. So the Big Ranch project is actually one of our two recent copper discoveries. The other one is called Cañada, Cañada is about 10 kilometers southeast of Lavras, which is right near where our phosphate deposit is. The Big Ranch deposit is about 70 kilometers to the north, both along an existing copper trend where there was a past copper producer called Camacua. Big Ranch, what it offers us right now is a grassroots exploration opportunity, the same as Cañada. We've run geophysics already on Big Ranch, and we started our drills turning a few weeks ago. The results will be coming out within the next quarter or so. So this is really, for an Aguia shareholder, a free upside option on some potential value that could come from this. The major growth opportunities going forward for Aguia are really on the phosphate side. As I mentioned, the copper is an upside, but it's very early stage. In the phosphate side, phosphate pricing has started to recover on a global basis. Two industry think tanks, CRU and Integer, have recently put out reports citing a positive phosphate market for the next 5 years, particularly focused on Brazilian domestic suppliers of phosphate. As you may know, Brazil is the number 1 or 2 supplier of agricultural product for the world. They're number 2 behind the US of supplying soy into China. And to grow soy in Brazil, it requires quite a bit of fertilizer. Phosphate is a part of making fertilizer, and most of the phosphate right now into Brazil is imported from other countries, including Morocco to a large extent, and we will be the only domestic supply in southern Brazil. So the obvious major challenges that we faced over the last little while has been, like with many mining companies and resource companies, a falling commodity price. Again, that price has turned the corner. We also listed on the TSXV recently, and one of the other issues that we had as a stock was our illiquidity in the marketplace. That liquidity has picked up, and we've had a great opportunity to add new investors to our profile. I think what makes Aguia stand out, as I've mentioned, is that we will be the only source of local supply to a market that is very much in demand of our product, which is base phos rock. Compared to other mining companies in gold and copper, we are a little bit unique in that the fertilizer market and the agriculture market might not be as well understood, but we do differentiate ourselves by being the only source of local supply. I think the value proposition speaks for itself. Our bankable feasibility study that came out in March of 2016 showed a tremendous amount of value at what was the bottom of the phosphate market. The NPV came in at 300 million US. With that lying as a base valuation for the stock, which has of course come off with other commodity stocks, you do have an upside opportunity both on the phosphate, which is our main project, but also with the new copper discoveries that we just started drilling. Aguia was only listed on the Australian exchange prior to our involvement, and in the last year or so we did start listing on the Toronto Stock Venture Exchange, on the TSXV, and what we've seen is an increase in liquidity, but more than that, our North American, Canadian, US investors, both on institutional and retail, have a much better opportunity to know the company and trade the shares.